Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW SYS 008 traders. And our website is www.tstwsys008.com. Alright. How one can invest. The title of this video is how to invest in stocks using the Fibonacci and wave theory. How to invest in stocks using Fibonacci and wave theory. Without a further blah 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 from my side, okay, we're going to start. So we want to combine Fibonacci trading and wave theory to invest in the stocks market. Though we are talking about stocks, we can implement this strategy for trading commodity, options, indices, currencies, any securities. All right. I have done some homework already here. You can see that I have counted 5 waves. So the stock that we are looking at is Pfizer. Okay, I prefer to call it Pfizer. I like that name. But generally traders call it Pfizer, but I like to call it Pfizer. All right. So feel free to laugh about that. Okay. So if you hear me talking about Pfizer, you know that it's a Pfizer, this company here, and we have all right, a scenario when we have a 5 Elliott wave. The first wave is the pink line here. So from 1990, okay, up to 1999. Okay, Pfizer or Pfizer was in a motive wave. We have counted 5 waves. So was in a trending period, all right? So that was the first wave in which I highlighted in pink, followed by the second wave, all right? The second wave I highlighted into turquoise. And we have the longest wave, which is the third Elliott wave, all right, highlighted into orange. So the third Elliott wave was from 1994, all right, up to 1998, 4 years, bullish third Elliott wave. Don't sell, okay, do not sell during that period because it's an up move, all right. Priority to buy signal during the third Elliott wave, all right. And then we have the fourth wave, which is very shallow retracement in comparison to the third Elliott wave because the stock is very, very bullish. And you don't want to challenge it, okay? So as soon as it comes down a little bit, they were ready to buy it. And after the fourth wave, which we highlighted into red, we have the fifth Elliott wave, all right? After the fifth Elliott wave, we have what we call, okay, a double retracement, which means we have a correction, 1, 2, 3, and a price return back to the starting point. That's what we call a double retracement. There was a correction, and the price go back to the starting point again. This is what we call a double retracement. A double retracement is a pattern, an Elliott wave pattern that we see during okay, the formation of the Elliott wave, a flat correction. So very often, if the bullish trend is very, very strong, you are likely to see what we call a shallow correction, and you'll see a double retracement first. If you want to know more about the flat correction, go to www.24elliottwaves.com, all right, or check our YouTube channel, 24 Elliott Wave YouTube channel. Digit 2, digit 4, Elliott Waves in plural.com or YouTube channel, okay? So we have a double retracement followed by what? Okay, a 5 wave. 1, 2, 3, 4, 5. All right, this is an expanded flat correction. We have what we call a running flat correction. We have a regular flat correction, and we have also, okay, an expanded flat correction. So we have the motive wave, the trending phase, followed by a correction. So the Elliott wave cycle, talking about cycle trading or cycle investment, there is a trend and there is a correction. You want to understand the Elliott wave correction. In order to invest in a stock market or any other market, forex market, all right, one must understand a cycles, all right? So this is a bullish cycle. During a bullish cycle, we have a trending phase and a profit-taking phase. All together form the cycle. The bullish trend does not form the cycle. Remember, the cycle is completed after the profit-taking, right here. So the cycle that has begun in 1990 has ended in 2009. All right? That's 19 years. Say, call it 20 years. Okay, 20-year cycle for this Pfizer or Pfizer, you'll call it. Epic PFE listed on the Dow 30. All right. So how do we use, okay, Elliott wave and Fibonacci? So this is about Elliott wave. So the first condition, we want to see a trending phase, all right, and a correction, talking about the wave principle. So these are the two conditions that we must verify. Does an Elliott wave cycle complete itself, all right? Do we have an Elliott wave cycle? Yes, we have an Elliott wave cycle. Why? Because we have counted 5 waves followed by a correction that is completed. So we have an Elliott wave cycle. Now, the next step, we want to use a Fibonacci retracement. Anytime I write the word retracement onto my computer, then my computer will highlight it as a mistake. I hope Google will integrate that word retracement, R-E-T-R, okay? Tracement, all right? Onto their system so it doesn't highlight as a mistake. Anytime we put the word retracement, it's a trading word retracement, and they need to upgrade, whatever, so the computers can recognize that word retracement, okay? So we see an Elliott wave cycle. So a cycle that has started here in 1990 has ended here. Second condition, we want a price to be in the zone of a 78% Fibonacci retracement level. So how do we draw Fibonacci retracement? We will start from the starting point of the trending phase to the ending point of the trending phase. We are not talking about the cycle. We are talking about the motive wave or the trending phase. From the first wave, we start drawing the Fibonacci, okay, retracement up to the top of the trending phase. And the level we want to highlight, if you can see on my chart, this is the 78% Fibonacci retracement level. That's the red line here. What we are looking for, we are looking for financial instrument that reach the level of a 78% Fibonacci retracement level, all right, after the Elliott wave cycle is completed. Let's check how long I've been talking to you now. That's 8 minutes so far. Okay, so I'm doing okay. It makes sense? So, stock that has completed an Elliott wave cycle, stock, and also stock that has reached the 78% Fibonacci retracement level. So we can scan for stocks that have reached the 78% Fibonacci retracement level. So your scanning software, TC2000 can do that, other software can do that, 78% Fibonacci retracement level. So you have a bunch of list of stocks that have reached a 78% Fibonacci retracement level. All right. Now you're going to visually check whether these stocks have completed an Elliott wave cycle, meaning that we have counted 5 waves plus a correction. Here we have a flat correction. There are different types of Elliott wave correction. Trader will check our website 24elliottwave.com to understand the wave trading and the wave theory. All right. You can see that the last 5 waves are overlapping. First wave and fourth wave are overlapping. This is because this is a corrective 5 wave here. This is not an impulsive 5 wave here. So first thing, we scan for stocks that have reached the 78% Fibonacci retracement level. Next verification, we want to check whether an Elliott wave cycle is completed. All right. Once we have selected, now we will filter our stock that are aligned with our verifications. Okay. Elliott wave cycle completed. Stock at 78% Fibonacci retracement level. The third steps to invest in the stocks or any financial instrument using the Fibonacci and Elliott wave, all right, we will now go to Google Finance. So for this stock, Pfizer, we'll go now to Google Finance. Let's go to Google Finance, All right, you can go to www.stochasticmoney.com, click on finance to know how to use Google Finance. I'll give some few tips there and to help traders so to familiarize themselves with okay, the Google Finance. Okay, I'm just going to put here finance. Okay, here it is, Google Finance, and we will go to Google Finance and we will type in the epic here. You see here, search finance. See Google, you see the box here. So I'm just going to put the epic for Pufizia. It's a PFE, Papa Foster. You see here, Pufizia Incorporation. So I just hit on it, click. All right, here it is. All right, so the next thing that we need to do is to click on financials. Here it is, you see here, financials. I don't want the video to be too long, so I'll refer traders back to stochasticmoney.com, click on finance. Click on financial. We want to check the balance sheet. All right, we'll check the balance sheet. All right, this is very, very important. The balance sheet, I want trader to check the annual data. So this is an income statement. We are looking at the income statement here. If you want a balance sheet, we click on the balance sheet. If you want a cash flow, we click on the cash flow. The financial is about the income statement, the balance sheet, and the cash flow. We will analyze the financial, most importantly, the balance sheet. We want to perform what we call Google Finance Assist Test. Check George Trio channel for the video that we call how to use a Google Finance Assist Test. You do a quick verification. You will check other fundamental ratio. And also, you will click on here. After you have checked the financials, you will check the news. The current economy news that are related to Pufizia, they are here. You can see, you can read them. And okay. And also, you can check the previous news. Sometimes, some news that has been released are hanging on the financial instrument. Professional do not forget. So you want to check previous news and have a bit of idea what's going on with this company. All right. Okay. All right. So you have done the verification, the financials analysis, which means fundamental analysis, checking the financials. Okay. The income statement, the balance sheet, and the cash flow. You have done your verifications. You check the news. Very important. Now you will implement the trading triangle. You will now check the market first. Is the market sentiment bullish? In 2009, we know that the Federal Reserve was busy printing the dollar, and all the money that has been printed was pumped into the stock market. So best timing, the stock market will go up as the Federal Reserve was busy printing, okay, more dollars. All right. So here it is, good timing. So we do all this verification. So as I'm explaining to you now, it's not sufficient to use a Fibonacci and the wave theory alone to buy and hold a financial instrument or to sell and hold a financial instrument. So you want to do other verification, use the trading triangle, check the market environment, check the market sentiment, and check also the sector. Okay, great. And then you will focus on the financial instrument itself. You also use the inside of the trading triangle, the market leaders, what's happening, okay? The fundamental and the economy news, as I said already. So apart from the Elliott wave and the 78% Fibonacci retracement level, we'll go to Google Finance to our verification and we will implement the trading triangle. Once we are satisfied, we will be looking for opportunity to buy and hold or sell and hold. Traders that want to remain in the market for a long time can buy a call option using options to remain in the market without being taken out for a long period of time, or you can physically, all right, traders sometimes forget that, you can open, okay, a share dealing account with your bank, okay, and you can physically buy that stock and hold it, which means you are not going to be taken out of that investment because you have a share certificate, online share certificate that your bank holds for you, and you can at any point log into your share dealing account with your bank and then just take profit and go. So you can, unlike that, you can buy some stock instead of wasting money in day trading, swing trading. You can physically buy and hold the stock for many years, 5 years, 6 years, whatever you want to do after you are satisfied with your verification. I need to explain to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW as well as 008 trader. So there are many ways trader can intervene in the market. We can use spread betting. We can use CFD. We can use options. We can also, which traders tend to forget, buy and hold physically. All right? So if you're in London, for instance, you can open a share dealing account with Barclays Bank, with Halifax Bank. Most of the major banks have a share dealing account. They charge you commission for each transaction. But what you are doing, you are just buying the share, and the bank will hold the share certificates, all right? And at the time, you can just log into your account, okay, buy, and then sell. There are different types of share dealing account. There are some for trading local stocks, and there are also another share dealing account for trading international shares. So check you with your bank. Say, I want to buy a share United States, but I live in London. With account I should open. I want to buy both UK share. I want to buy and also share in India or whatever, or in Japan or whatever, or in Europe. And they will tell you what's suitable for you, and you can just go in and log in and buy and hold. You need to understand that buy and hold does not exclude the risk. So you may say to me, George, no, I know. There's no more risk. I can just buy and hold for all time. But remember, for all investment, there is a risk, and you want to control it carefully. Don't go and put all your saving into the stock market. The stock market is always risky, all right? You may decide to buy land or do something else, or keep the money, all right? Keep the cash. It's up to you, all right? Do not expose all your saving. This is very important for traders. Do not, if you have a lot of money, don't gamble it. Don't go and empty everything and just go, oh, that's my only hope in this world. Don't get into that mode, okay? Don't do that. 5% money management rule is applicable also to all your, your wealth, all right? You want to come into the stock market? Okay, use 5% of your wealth. That's my own view, okay? It makes sense? So we are using the Elliott wave to determine, the motive wave and the corrective phase to highlight the Elliott wave cycle. Once we are happy with that, we are looking for the 78% Fibonacci retracement level. Why? The reason why professional and long-term investors use the 78% Fibonacci retracement level is a highly discounted stock. So stock that went up all the way to 100% is now giving us 78% discount. Very often, stock will pull back to 78%, not because of the fundamental reason, but just because of a harvest time. Professionals are taking profit. The bullish party is over. The market does not go up forever. You understand? So there will be times so they are selling it. They are selling it. They are selling. People will be complaining that the bear is blah, blah, blah. Shut up, for God's sake. Market will go up. Market will go down. There are times when people will say, the market is still bearish. We shouldn't be selling. Why the market is going down? Shut up. The market will go up and the market will go down. Okay? I'm talking like this to get traded attention. The market does not go up forever. All right? 2008, people say, blah, 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 blah. They will blame somebody else for it. But the market has a cycle. You see, this is a bullish cycle. The market was going up fast, but there was a time it's going down. But this is something, whenever it's going down, people don't like it. They say, oh, why is it going down? But it was going up before, all right? And people forget that it went up before. So they think that it's going to stay up forever. And those are crazy investors that always buy. Okay, buy, anytime. They lose money at the end. Don't buy all the time. Buy, after a new bullish cycle is about to begin and the fundamental and the global market is ready to buy. Okay, it's about the timing. Timing is the most important thing. But with this method, one should be able to time the market more accurately using Fibonacci and the Elliott wave and the 78% Fibonacci retracement level. So the quickest way to select this stock is to scan for 78% Fibonacci retracement level on the monthly chart. Though this strategy is valid for the hourly chart, 30-minute chart, daily chart, weekly chart, for long-term investment, repeat, traders must use the monthly charts. No other time frame. So you can apply it for day trading, blah, 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 but monthly chart for long-term investment in the stock markets. All right? I hope you have learned something from this video also, okay? And we'll put it into use to make excellent decisions. We are the TSTWSYS008 traders. Thank you for watching, and we will speak to you very soon.